Welcome back everyone to my investment journey with me, Thomas James. In this video, I want to discuss what I feel are the best dividend paying investment funds in terms of growing a strong portfolio for passive income. This graph highlights my level of monthly passive income year to date. Still relatively low, however, if you watch my previous video, you will have seen that I have very recently increased my holdings in 5 different dividend paying funds. Depending on the fund in question, they will either pay out a biannual, quarterly or monthly dividend. So if you haven't seen the previous video, I'd recommend that you go and check it out. I'll put the link in the description below. It is important to highlight that 2 sources of passive income are being recorded in this graph. Firstly, red represents income from dividends that I receive from my independently held shares. Secondly, in blue, and what I want to focus on in this particular video, are the dividend payments from investment funds held in my ISA account. So I'm expecting the dividends from the funds to grow steadily, providing a good base level for my independently held shares, where I expect the dividends to grow exponentially in the coming months and years. So I've done some calculations to work out expected future dividend payments based upon A, current holdings in each fund, B, expected future investments in each fund that I will make, and C, of course, expected dividends in terms of percentage yield and frequency. If I use these calculations and plot them onto the graph, this is what I expect in the future. You can see along the bottom here, there's a steady increase each month caused by the monthly paying fund, increasing in value. Then I also expect to see larger spikes when the quarterly, biannual and annual funds pay out their dividends accordingly. Okay, so really the main purpose of this video was to talk about different factors that I considered before selecting each of these funds. So what I want to do here is a side-by-side comparison. So along the top you can see the different fund names, and then down the left-hand side I'll talk through different factors that I've considered. So the first one is the percentage yield that you can expect from each of these funds. As you can see here, the Artemis is above 5%, as is the Royal London bond. However, the others are still between 1 and 2%. The next factor to consider then is the frequency at which these dividends are actually paid. So again, the Artemis is attractive at a monthly payout. The 3 in the middle are all biannually payments, and the final one then is quarterly. The next factor then that's also important to consider is the performance of the fund overall in terms of the previous 12-month period. So you can see here, this is where the Artemis and the Royal London do not perform just as well, whereas the others are 9%, 17% and 19%. So good solid growth over the last 12-month period. The next factor then that I wanted to consider was whether or not each fund was part of the Hargreaves Lansdown Wealth 50 categorization. So this is really a collection of funds that they have reviewed and selected as being the best within their offering. Now again, this is just an opinion, so it's certainly not gospel, but it is good to have that second opinion at the same time. Another important factor to consider with these funds is what charges they're going to impose on you. The first one I've looked at here is the initial charge whenever you invest for the first time, and as you can see here right across the board it's 0%, so great, nothing to worry about there. Next then is the net ongoing charge. Now I've mentioned net here as this includes any discount that I receive from Hargreaves Lansdown, and this really does vary. As you can see in the middle here, Legal & General is close to 0, 0.06, whereas it ranges right up to 0.95 with the Fundsmith equity. Next then we have the actual size of the fund. Now again, there's quite a range here, but even the Artemis, which is the smallest fund, is over £1 billion, so certainly nothing to be too concerned about. Next then we have categorization as to whether the fund is aimed at accumulation or income. Again, bit of a mixture here. We have income 3 times and accumulation twice. And again, I decided to go for a mixture to really do experiment to see how things progress over time. Finally then, on this slide, we have the top 3 countries represented within each fund, heavily dominated by either the UK or US throughout, along with maybe another 1 or 2 European markets. I know I already included details of the past 12-month performance for each fund. However, I also reviewed the past 5 years, which is very nicely highlighted in this graph. As you can see along the top in the red and green, the Fundsmith Equity and Linsdale Train performed very well indeed, with the Legal and General around average in the middle here. The final factor I wanted to consider then is what are the top holdings within each of the funds. So I've listed it out here at the top 10 for each of them. As you can see in the Artemis on the left hand column and the Royal London on the right hand column, they are both predominantly made up of bonds. That's in contrast to the other 3 funds in the middle. The Fundsmith, Legal and General and Linsdale Train are all made up of individual shares, or predominantly so anyway. And you can see it's most of the big hitters, as you might expect, the likes of PayPal, Microsoft, Unilever, etc. Well, that's it everyone. Video number 3 complete. If you enjoyed it, great. Please hit the like button. If you haven't done so already, please subscribe to the channel. And as always, leave a comment below. What did you think? Did you enjoy the video? Any areas for improvement? Are there any future videos that you would like me to make? Just let me know. I'd also recommend maybe checking out the first 2 videos if you haven't done so already. I'll add in the links here so you can access them. As always, thanks again for watching, and I hope to see you all again soon.